And we're back. It is Wednesday, April 30th, last day of the month. Paul Capetta's here. He just ran in from the train or whatever the heck. You look great for having rushed in.
Yeah, man, you can never underestimate Chicago traffic. It's never.
So drove.
I drove in. Yeah, the
Dang.
train gets a little tight early in the morning. So yeah.
Was it Dan Ryan?
Yeah, Dan. Well, 290 was a mess as usual. So,
Gotcha. Dang, man. Well, we're happy to have you. We're running a little late, so we'll dive right into it. No lack of interesting stuff going into Wednesday morning here. Let's take a look at the market and see what is moving, some interesting trends. First of which, some dollar strength against the major players here. And I'm looking at you, dollar yen, back above 143. Now, we've been here earlier this week, Paul, but this is about 100 points off of our low of 142 earlier this week. We had a slew of European data. We'll get to the euro in a second. That was actually better than expected, some higher GDP numbers coming out of the euro area. Today, we have a ton of U.S. data coming out. We've got U.S. GDP, we've got ADP employment, we've got PCE, and this is all leading to Friday's non-farm and next week's FOMC. So right now, Wednesday to Wednesday, one of the busiest times for the U.S. schedule. Should probably get a lot of U.S. dollar movement as the tariff talk has chilled out a little bit. But interesting action, like I say, this morning, because you also have, and we're going to do a segment on it, you have the gold market coughing up another $50. Now, that market has been able to bounce around, and actually, it's interesting that now I'm talking about it, Paul. Do you think it's any coincidence that this morning dollar's getting a little bit of a bid against yen and also against this sterling piece? Some of the pieces that have been the strongest the last handful of weeks. Obviously, we know that dollar yen has fallen from above 150 all the way down to below 140 at certain stretches. Dollar regaining a little bit of strength here. As you see, the pound has fallen back down to 133.60. We got down to 133 to start this week. Again, some back and forth, but gold also moved lower, bounced back, and now is moving lower again. This dollar-gold correlation starting to pick up a little bit.
Yeah, definitely. I mean, it's always going to be a correlation there because gold is obviously priced in dollars. But you kind of just some of the news, a little bit of the tariff tensions kind of relaxing a bit is why you see the dollar strength. And there could be a variety of things, but we had such a kind of a huge move in the dollar weakening that now that they're giving back some of this is kind of a little bit natural. And yeah, if you zoom out of any of these charts, you're going to see that exactly.
Especially the sterling piece. I mean, 134 is really the high for the last couple of years, and we're 40 points off of it.
Yep, exactly. Yeah, and it's given back a little bit, so that's kind of natural. Is 134 the top of the year? I have no idea. I don't think any of us have any idea where we're going to be at the end of the year. So.
Well, and it'll be interesting because we're going to show you the correlations in a second. I do want to dive into a couple more markets and then look at that calendar before we do. But again, I don't know if there's any coincidence between gold. Pretty much, if you were to zoom out, you would say, holy smokes, it's been a hell of a run in gold, and we're kind of a rounding error off of all-time highs in that market. And then again, we go to the daily chart here and you zoom out and you're like, holy smokes, this is a hell of a run from, 122 up to 134 in about 3-4-ish months. And we're kind of a rounding error off of it. But we are just starting to see big down days in gold and decent bounces in dollar. Now, it's not, correlation is never, the magnitude of the move is not measured. You could have a very high correlation, and we've seen this at certain times where Australian dollar can have a very positive correlation to U.S. equities and Chinese equities and what have you, and you can see that the S&P in a given year is maybe up 10%, 15%, and Aussie is up like 1% or like unchanged even, and they still have a high positive correlation. So that magnitude of the movement not necessarily playing through. Again, gold off about, last time I checked gold futures this morning, off about $50, and dollar is eking out, 40 points against this pound market, 60, 70 points a couple of minutes ago, but actually now the dollar's giving back some ground. I wonder if that gold market is maybe rallying off of its lows. But you are starting to see the correlation is picking up, and the numbers will confirm it in just a second. Anything else on the board? I know that you're just getting in front of your platform here, but anything else this week that's been interesting to you?
The euro's been really interesting. I mean, this thing bounced above, I think, 114.50 yesterday at some point, maybe. Maybe not.
Yeah, no, you've seen plenty of moves here. I mean, this is the daily chart. We'll get into the 15-minute in just a second. But I pointed this out to Pete earlier in the week. Plenty of wicks above 114, and not a lot of closing above 114.
Yeah, and I do wonder if this market is kind of waiting on non-farms to come out to give us a little bit more of a sense of how the U.S. economy is doing through the first quarter. But we'll see. I mean, this thing is another one that's ran up so much, it's not really surprising to see it pull back a little bit from recent highs.
Yeah, but it is interesting. A lot of these markets, I don't know if it's waiting for non-farm or waiting for the looming FOMC, and now the market doesn't think anything's going to happen at this Fed event here in May, rate change-wise. And also, I think if you've been watching Powell the last few years, like we have very closely from his speeches in and outside of the FOMC, he's not the type to necessarily like pick some big public battle. And I'm, talking about our President Trump.
Yep.
When I bring that up, now what we could see is a kind of live tweet situation. That could be very realistic. That the Fed comes out, they don't cut, they give very level guidance like they usually do, and Trump has something to say. Maybe it's a big event that way, but it does feel like a lot of these markets here have had such huge runs to start April. And I don't know if the energy is kind of coming out of them or if we're waiting for the Fed event. But we are, you could have, and of course, history is not going to dictate what happens in the future. So I don't want to necessarily say like, like you could sell 114s all the time. But the last week or so, you could have sold any of these rallies above 114 and they have come back. That would have been a very tough ask when I go out to this daily chart and you look at the run up to 114, because there were plenty of people that were in here at 108, and hopefully you got in and out unscathed if you were selling those 108s and 109s. 110, same thing, where it gave you a little bit of a dance here. 112, they blew right through it, and then 114. This has been the first price point, and I could go across to all of the majors here in the daily chart, and it's a similar thing. This run lower in U.S. dollar here against yen, 140 to 143, 145, whatever you want to call it. The first price point where the action's kind of stalled out, and you've been able to trade both sides of it. Again, I don't know if the energy is out of it. Maybe May it picks up again. I don't know if non-farm kickstarts it, or we're just waiting for this Fed event.
Kind of in a wait-and-see mode almost. That's how kind of the market, when you get kind of those, if you go back to the euro-dollar chart and you go into the 15-minute again, you look at this, this thing gets really choppy. When markets get really choppy, it's kind of just a wait-and-see mode. They're waiting for the next thing to kind of give us a direction, and I think that's where we are, especially with tariffs kind of. They were talking about some trade deal yesterday that they had agreed to that they're not going to tell us who it is, so it's like, it's really weird, obviously weird telegraphing. But on the flip side, the Fed does telegraph all their moves pretty well now, and I think that's kind of Powell's stance on the whole thing. Yeah,
I agree with you. A lot of chop, but it just does continue. It's not like a lot of chop like we got up to 114 and we're chopping around like 113 or 112. Like they're chopping around the extremes. Like they've tried to take that dollar-yen market back down to 140 a couple of times. Haven't been able to do it. This euro market, same thing. They're trying to take it up to 114 and a quarter, 114 and a half. Not really able to do it. Pound, we saw the same thing yesterday, where they put in a new high here on the year in pound yesterday. or 2 days ago, not able to really break it. So we'll see. Just really quick on that economic calendar front, a ton of GDP data came out of Europe, a little bit stronger than expected, not really moving markets so much here this morning. On the U.S. side of things, we do have our own GDP, which is expected to be lower. A similar thing with Euro area, expected to be lower. We'll see maybe if there is a little bit of a surprise to the upside like they did get in Europe. We also have some employment data, if I'm not incorrect. Yeah, that comes out in 30 minutes, actually. So employment data at 7:15 Central Time, GDP data at 7:30 Central Time, and then PCE and personal spending data at 9 o'clock Central Time. A lot of stuff, and then obviously a week from now is that FOMC, and 2 days from now is that non-farm. So a lot to watch for. But let's get into our segment for today. A lot of numbers to crunch with our friend Paul. Will gold or treasuries cause the next dollar crash? Will there be another dollar crash? We're going to get into all of it, some crazy price action in that US dollar. We're going to look at euro dollar. We're going to look at dollar yen. And we're going to also correlate all of it to the recent big moves in gold and treasuries. I brought this to you yesterday, Paul. I said, let's talk about some gold correlations. Everybody's talking about gold, obviously. Gets to, I mean, I shouldn't even, it's like the S&P of 2 years ago, where it's like new all-time high, new all-time high, new all-time high. You can write the news story every single week. Gold has kind of backed off of those all-time highs at the same time that US dollars kind of found a bottom. And you came back to me and you said you wanted to talk about treasuries. Do you think that treasuries is more of a correlation story, before we look at the numbers, than gold?
I think treasuries and dollar yen are very interesting. There's a lot of structural trades that go on based on yen and treasuries, and you go into the weeds, you can get lost pretty quickly. But it's a pretty interesting kind of area. We won't go too far into the weeds there. We'll get quite complicated.
Well, that's why we have you here, is to go into the weeds. Yeah. And also, it's like Frank comes to the table with, I want the flashy story. I want to talk about gold, and you come to the table with the more statistical. I'm a gut guy, you're a stat guy, and I appreciate you helping us out with that, keeping us grounded. I did run a bunch of correlations for us, so I'm not just the flashy guy here. But looking at the US dollar basket compared to gold over the last 10 years, you see a couple of things, Paul. One, it's red all the time. That means that the correlation between these two markets has been inverse every single month going back to 2015. Now, you would expect that, of course, but even some of the strongest relationships, you see flashes of weird markets. And so I was ready for, at certain periods in maybe 2022, or especially around the pandemic, you get a lot of weird data prints around March of 2020. Surprised to see no positive correlation at any period between gold and dollar here. Are you also surprised to see that it's been some of the weakest correlations in 2024 that we've seen in this whole data set?
Yeah, that's the interesting thing. It's kind of an interest rate dynamic, I think, because as interest rates have stayed high in the U.S., that obviously has led to dollar appreciation against the rest of the world, which is how the dollar basket is calculated. But interest rates are high because inflation's high, so people use gold as an inflation hedge. So it's all kind of a self-fulfilling prophecy there. So there's a little bit of that. What I think I'm the most interested in right now is this correlation, this negative correlation starting to get stronger. Yeah. That's the key kind of takeaway. And you can see the chart. It gets weaker, and then it starts to get stronger again, and it gets really strong at some points. So. And
you could see a couple of things here. Is the correlation has been as weak as about negative 0.25, which is like pretty weak correlation number. Where if you're looking for something that's strong, you're usually looking for something that's more than 0.5 in either direction. Yeah. That being said, we put in that low correlation here, like you say, kind of weird dynamics at certain times. Yep. Where inflation is there, it's causing interest rates to move higher, but it's also maybe causing some gold demand at the same time. it seems like we're maybe away from that dynamic, or at least the market has started to move away from that dynamic as interest rates have moved lower. US dollar, like I say, it has moved off of its highs. Gold has not necessarily, but you see in the last couple of weeks here, and if you've been watching markets, you've seen in the last couple of weeks as we conclude April, gold coming off of its highs a little bit, and U.S. dollars seeing some bounces, and that correlation is getting a little bit stronger. And I do point out that before we put in these low correlations, some of the lowest that we've seen historically in 2024, in 2023, you did see some of the strongest inverse correlations. So we could move back to that. I wanted to layer on two charts here. In the black line, you've got gold, Paul, and in the backdrop there, the candlestick graph, you've got euro dollar. So again, we just showed you an inverse correlation between dollar and gold. Now, since we're looking at euro dollar and gold, likely a positive correlation between that euro dollar and gold market. And you can see here the rise in gold from where it kind of stalled out in 2024 after it's been, I mean, I say stalled out, but these are all, new all-time highs. And then it kind of stalls out a little bit, and then we see another big run here to start 2025, very much in line with that big run that we saw in euro dollar to the upside. And I think this is where the correlation has actually started to get stronger, right?
Yeah, you saw it start to pick up steam. I mean, as soon as the tariff tensions, obviously that means people fled away from the dollar, and where do they go? Well, some people went to euro, some people went to gold. Treasuries not so much. It's again a different dynamic, but you saw this market catch up to gold. I think that's you kind of saw the catch up in the correlation, and a lot of these things that we know are correlated, they'll catch up really quickly, especially when the correlation hasn't been working for a while. So that's what you get. You kind of get here. Obviously, there's a ton of dynamics that have led to this. Obviously, the tariffs, the different interest rate moves, the EU kind of seem to be weathering their storm as far as on the economic front. So it's an interesting kind of catch-up trade that the euro's put in here.
Yeah, it's you've seen gold for the last couple of years have, in certain parts of its trip through all-time highs the last couple of years, be correlated to equity markets. And we haven't actually seen that in 2025. And actually, if you look at the last 30 years of data, you don't see that most often, a positive correlation between gold and equities. In fact, if you go back to pre-pandemic, a lot of times you see gold listed right there with bonds as a flight to quality trade, right there next to yen, which we'll get to in a second. You're starting to see that take place a little bit here again, like you say, around tariffs. And it's funny that we never know what the catalyst is going to be for a correlation kind of coming back in line, or a market relationship coming back in line after it's been, aloof for years. And this tariff stuff might be the catalyst for gold, again, becoming a little bit of a risk-off trade, a little bit of a flight to quality, because we've seen the rise in gold correlated at certain periods with falls in equities and falls with this U.S. dollar. So the correlation growing there. I do want to get to Paul's piece here, which is U.S. dollar relative to treasury prices. And again, you have an inverse correlation. Interesting and this is kind of my point earlier, is like you do see these flashes of positive correlation, which it doesn't make a lot of sense to the textbook economist. You would think that, if treasury prices are rising and U.S. interest rates are falling, there would be less dollar demand. But you do get these wonky markets like we did in 18-19 or in 2021 where there are flashes of it. But to your point, Paul, actually right now coming off some of the strongest correlations that we've seen between these two markets in the last 10 years.
Yeah, again, there's what's the dynamic that's kind of caused some of these correlations, and some of the correlations actually weakened towards the kind of the recent months, which is a real interesting story. But so kind of what you had saw there, if you look at, there's a big spike down, this correlation gets super negative kind of at the beginning of this year. So there was kind of this worry that deficit spending was going to get really high, that basically the U.S. interest rates are going to be higher on the back of that. U.S. has more debt to service. Interest rates go up in general. It's like a company with more debt would. But then this starts to back off. Kind of the last month or two action we've saw in treasuries has been probably the most volatile I've ever seen in my life.
Very crazy price action in treasuries.
There's a couple nights where you get a 30 to 50 basis point move in 10 years, which is unheard of overnight. You get a bunch of traders like me watching 10-year prices at 10 o'clock at night, which is, we think we should probably be going to bed, but we're still sitting there looking at our phones. But yeah, there's a number of things. There was a basis trade that's kind of got unwound that took some hit into the treasury market, but that didn't really play through the dollar, like an unrelated story. So there's a lot going on there, and it's kind of interesting to see how this correlation's been playing.
Well, I'm glad you brought that up because one, when you bring up unwind, I'm almost always ready to talk about dollar yen, and two, this price action here is where the correlation is starting to break. Like you just said, the correlation is actually getting weaker here. It's getting stronger between dollar and gold, getting a little bit weaker between dollar and interest rates. And you see here where dollar is putting in its lows against yen, and those 10-year yields are actually spiking here at the start of April. Of course, historically we've seen this dollar outperforming as interest rates rise or as U.S. Treasury prices move lower. But yeah, really interesting to see that the 10-year, dipping to 4% correlated with that big dollar sell-off, but then bouncing off of that 4%, not so much correlation. And that's, of course, because of the interest rate differential between a lot of these places. You likely saw interest rates bouncing in a handful of regions like Japan, Euro area, and what have you there to start April, correlating to that U.S. dollar, not necessarily bouncing in the same time. I do want to close out with a couple of takeaways here because we do have gold at these all-time highs and the correlation getting stronger between gold and dollars. So if you think gold is maybe going to move through those all-time highs, that long dollar position might not be as attractive. Or if you think gold is going to move through those all-time highs and you like a short dollar position, maybe it is more attractive. Now, of course, we do have to say that historical price action and correlations don't dictate the future. But something interesting there on the interest rate side of things, Paul, we are expecting lower interest rates here in the U.S. That said, they're expecting that globally. And like we just showed you, that correlation is getting a little bit weaker. So I don't know if you can necessarily count on the fact that the Fed, the market is expecting the Fed to be 100 bips lower here by the end of the year, is necessarily going to cause that dollar collapse. What say you? Of course, again, one of these things, we don't know what's going to happen in the future, and we can't say that if gold does this, dollar's going to do that. But what are you looking at for the next move in dollar, more gold or interest rates?
How about jobs? I mean, if the economy gets weaker, that would be, I think, the telltale side. This is what this market's pricing is, that the economy is going to get weaker and that we're going to have to cut rates. This is not telling me there's any inflationary pressure from tariffs, is what the market's pricing in here. Obviously, that's still up on the table. There's way too much uncertainty. I wouldn't even like this 40%. Like, we've seen this market price in some weird things. I think we're supposed to get like 5 cuts last year, and we got 2. So yeah. You
raise a good point, Paul. Though 40% is the largest probability, I would definitely take any of the other choices versus that 40% because we might land around there. We have no clue where we're going to land. Thank you so much for watching, everybody. We'll be back for more tomorrow, but stay tuned for Tom, Tony, and Vanetta coming up next.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not